Let's bring it home. Remgro invests in financial services, healthcare, food, liquor, shipping and other sectors.
Right, of course, this is the one that the Rupert family kind of brought into being, and then in 2008 it got all sorted out. But the core bits of it you've got to keep your head around are financial services, which is Rand Merchant Insurance, Rand Merchant Bank, all of that stuff, First Rand, and then healthcare, big chunk of Mediclinic in
Market
there
cap, 128.8 billion Rand, PE ratio here of 19.6, dividend yield of 2%. So they do believe in giving some money back to shareholders and not retaining it all for their own investment gains.
The underlying assets are very dividend yielding, so I guess they do pass some of that on. I think the South African market, South African investors like a dividend, and it gets a better rating for it. To some extent, you could say Remgro is the Berkshire of the South African market. Financial services, healthcare, food, some industrial assets. They've actually slimmed down. They had resources through Impala, but they unbundled that, Transex, all the little bits and pieces, more focused now under the leadership of Yanni Durant. And it has been a very strong performer.
Paul, can they do it better than you?
Well, they have obviously got what they've got, and they're very long-term investors. I mean, they were right there at the beginning of the formation of the Mediclinic Group, so they've done extremely well. They've allocated more capital to IT and technology investments in recent years, so Dark Fiber Africa, Seacom, some of that stuff I like. Although, you know, obviously the opportunity to be invested in the mobile phone industry sort of got away when Vodafone took the main stake in Vodacom.
Let's have a look at the share price graph and then we can continue our conversation.
What's interesting here is that the core pieces of it are available to you as a direct investor.
And you have to weigh up why you would rather go into Remgro rather than the underlying assets.
I mean, there's some very nice assets that are unlisted, like the Unilever South Africa business, the Total South Africa business, and a bunch of other things. But even those food sector stuff, they've started shoving inside of RCL Foods.
Correct.
So if you really like those, you could go down into that entity as well, with TSB and the likes.
Would you go for direct plays in those preferred entry points, you know, and single them out rather than saying you want the whole basket?
I guess as a hedge fund manager, it's very attractive to us because we can in a way pick and choose, because we could get exposure to the broader Remgro basket. And the main reason we would look to buy it is it trades at a discount to its underlying parts. So instead of buying Mediclinic, you can get in at say a 15 or 18% discount. And say you don't want exposure at one point in time to some of the other assets, the food, for example, RCL, you could short that out. So it's an interesting animal that you can work with. But because it trades at a discount, I think it's attractive in the long term to investors.
Well, would you concur?
Yes, I think so. Look, they've not always done brilliantly. I mean, the timing has been very good. They exited commodities and then got more into financial services about a decade ago. That was tremendous. I think the Grindrod investment looks a bit questionable to me. Shipping isn't the kind of industry that I would have been putting capital behind.
Grindrod just hasn't delivered for those value investors, and there was a whole herd of value investors that decided Grindrod was the right play.
But that's probably fairly small, even though it's a pretty hefty investment. And what I do like is the more opportunistic approach that they adopted recently by, for example, funding the Mediclinic acquisition of Spire Health Group and then getting the money back later. So it's indicative that they're levering,
participation,
not just, you know, like once every quarter coming together for a board meeting to nibble a few biscuits and drink a few cups of coffee and then go away again. They look as though they are applying their minds to the portfolio.
So where is this going for you?
I think it's hot. Look, I just think this one's going to do well because I really like the underlying Mediclinic investment. I think it's far too cheap at the moment. And also I like the financial services generally. Did we look at the share chart?
Yes, we did. Do you want to look at it again?
No, I think you're
nervous about tomorrow. I can see what's occupying your mind.
So yes, I'd go hot on it. I think it's destined for higher things.